we know there's institutional interest because we're talking to a lot of institutions, including state treasurers and public pension funds. And why is this? Because they're trying to figure out if this truly is a new asset class. And if it is, they must have a point of view. As a fiduciary, if there's a new asset class, which is uncorrelated or shows very low correlation in terms of returns relative to other asset classes, then what asset allocator does is it will take a position to increase returns per unit of risk. That's what happens with low correlation of returns. So definitely, now, are they moving whole hog? Not yet. And nor are the big wirehouses like the Morgan Stanleys and UBS's, Wells Fargo, Merrill Lynch, B of A. They are all waiting to see who are the winners in terms of the ETFs, because they do not want to commit to an ETF that will close down. And they're going to give it, from what we're hearing, 3 to 6 to 9 months. So everything, the net inflows that we've seen away from those two spaces, really. Part of it is our client base switching from GBTC into, and other client bases, into the ETFs, which are much lower fee.
Why the sudden surge in interest from major financial institutions in cryptocurrencies? What's fueling this shift towards recognizing digital assets as a potentially profitable class? It's a tale as intriguing as the financial world itself. So grab a cup of coffee and settle in as we unravel this story, brought to life by our very own financial whiz, Cathie. In the heart of Wall Street, Cathie has been observing this trend with a keen eye. She's noticed that state treasurers, public pension funds, and big-name financial institutions aren't just hopping on a bandwagon. No, they're strategizing, understanding the immense advantage of incorporating low-correlation assets to enhance returns per unit of risk. But the question remains, why now? The world of cryptocurrencies isn't new, so why are these big players only now turning their heads? Cathie believes it's a combination of cautious navigation and the lure of emerging investment vehicles. The terrain of cryptocurrency investment is new, uncharted, and understandably, institutions are treading carefully. They're keeping an eye on the development of ETFs that promise easier access and lower fees compared to traditional investment methods in cryptocurrencies. This, Cathie believes, is a significant factor driving this shift. And then there's the allure of the new. Major players like Morgan Stanley, UBS, and Wells Fargo are closely monitoring the market, ready to pounce at the first sign of sustainable investment vehicles. This isn't a mad rush, it's a calculated game of chess, and these financial institutions are playing to win. So what's the future looking like? Cathie's insights suggest a gradual transition. Cryptocurrencies are not about to replace traditional investment methods overnight, but with the promise of lower fees, easier access, and the potential of high returns, they're certainly making a compelling case for themselves. In summary, Cathie's observations paint a picture of a financial world on the brink of change. Cryptocurrencies, once the realm of tech geeks and risk-takers, are now drawing the attention of financial institutions. It's a shift that's happening gradually, but surely. The future? It's looking bright, promising, and yes, potentially lucrative. It's an exciting time in the world of finance, and as Cathie's insights show, it's only going to get more thrilling from here on out, so buckle up, because the ride is just getting started.
I do want to also then go to the next level, and that is an Ether ETF being approved maybe in May. Are you optimistic that it's going to happen by that May deadline, or what obstacles might be still out there that it won't make that deadline?
Yeah, so the biggest obstacle is staking, and I don't think the regulators will allow staking in this first round, if they allow the first round at all. Now, we and one other firm will see our final deadline in May. If they reject our filings, then we'll have to refile. But my guess is they will move more now to a first come, first serve when this next round goes through. So if it's May, it will be without staking. If it's later, there's a better chance for staking. If it's in, I would say, 2025, because I think legislators and legislation is starting to get involved here and taking it away from simply the regulators.
What does the U.S. economic environment look like to you, the business environment as well, and what it means for some of your investments?
Sure. It looks like that corporations are losing pricing power, and we are now beginning to see the unemployment rate move up. It went up to 3.9% in this latest report, from a low of 3.4%. So undeniably, it's on its way up now. And we do think it's because corporations are losing pricing power, their margins are getting hit. It's going to cause a couple of things. One, the labor hoarding that we've seen since COVID is going to diminish, and that will increase the unemployment rate. But then the second thing is it will accelerate the adoption of technologies. Innovation solves problems, and one of the things that it does is increase productivity, increase efficiency, and create new products and services. So we're pretty optimistic about our strategy in this environment because interest rates should come down. I think that the Fed, even the Fed, is going to be surprised at how low inflation goes. We think it could be negative this year.
So, Cathie, let me ask you, that's interesting. I mean, if the expectations, at least according to traders right now, is that the first rate cut comes in June, is that too late, in your view, for the Fed to start cutting rates?
Well, I think the 24-fold increase in interest rates in little more than a year has shocked the system. We're beginning to see a reverberation of the regional bank issues. We don't think they are going away. Deposits are still outflowing broadly from the banking system. And there are increasing problems with commercial real estate. Most people know about the office problems, but multifamily units, multifamily apartments, we're beginning to see some distressed sales there as well. So I think that problem isn't as well understood, I think, and it's going to cause the regional banks even more problems.
Cathie, how quickly do you think unemployment can go up this year? What are you forecasting over at ARC?
Well, I wouldn't be surprised to see the unemployment rate go above 5%. Now, I'm saying that knowing that this is an election year and that this administration probably will try and spend more than is currently in the budgets through executive order or what have you. But above 5% would not surprise us.
Imagine the future of finance, a world where digital currencies reign supreme. Will cryptocurrencies like Ethereum stand tall? Or will the regulatory hammer shatter this digital dream? This isn't a mere hypothesis, it's a question that's echoing in the hallowed halls of Wall Street to the bustling markets of Shanghai. Our tale begins with the birth of cryptocurrencies, a revolutionary innovation that promised to redefine the concept of money itself. Cryptocurrencies, with their decentralized nature and potential for high returns, quickly made waves in the financial world. Yet, every revolution has its challenges, and cryptocurrencies were no exception. As these digital currencies started to gain momentum, they also attracted the keen eye of regulators worldwide. Complexities such as staking, a process integral to the functioning of many cryptocurrencies, were seen as potential roadblocks. Regulators, wary of the unknown, began to tread carefully, taking a cautious approach towards embracing these innovations. The timeline for these developments remains uncertain, with significant milestones potentially being reached as late as 2025. The future of cryptocurrencies doesn't solely rest on regulatory decisions. Legislative actions and broader economic trends also play their part. Consider this: as we witness a decrease in corporate pricing power, rising unemployment rates, and a consequential shift towards technology adoption, we're standing at the precipice of a transformative period in the global economy. In this climate, innovative strategies thrive. Enter Cathie Wood, who suggests that technological advancements, particularly in sectors like artificial intelligence and blockchain, could be the key to addressing inefficiencies and spurring growth. But what does this mean for the broader market? As the Federal Reserve responds to fluctuating interest rates and changing economic indicators, the emphasis on innovation could redefine risk and reward dynamics. The strategic positioning within emerging sectors like cryptocurrencies could dictate the success of investment portfolios. Now, let's circle back to our initial question, the future of cryptocurrencies, particularly Ethereum. Cathie Wood anticipates the approval of an Ether ETF, a move that could significantly impact the evolving regulatory environment surrounding cryptocurrencies. In summary, the future of cryptocurrencies like Ethereum is anything but certain. Regulatory decisions, legislative actions, and broader economic trends all play a part in shaping this future. Cathie Wood's anticipation of an Ether ETF approval shines a light on the potential for growth within this sector, despite the hurdles it faces. In the end, the success of cryptocurrencies may well hinge on our ability to innovate, adapt, and navigate the complex world of digital finance.
We do not believe we are in a bubble anything like we were in the late 90s. I was there, and the technologies weren't ready, the costs were too high, too much capital chased too few opportunities too soon. The seeds for what is happening now were planted during the 20 years that ended in the tech and telecom bubble, and they've been germinating for 25 or 30 years. So we believe we're ready for prime time. The one place where we could see a correction, and it's just a correction, we're not calling it the end of this at all, is in the chip space. Whenever I hear the word shortage, and we started hearing about GPU shortages about this time last year, as ChatGPT was capturing the imagination of both businesses and consumers. So for about a year, we've heard that word, and now we're seeing lead times, we believe, come down for GPUs, for NVIDIA in particular, from the 8 to 11 month range to the 3 to 4 month range. So that is suggesting that there was probably a lot of double and triple ordering as the word shortage was making the rounds, and that those inventories will have to be digested.
But is that also because of an increase in supply in terms of output, or is it because you think demand is going down? Which one is it?
Oh, I don't think, no. Demand is not going down, though there is something we expect that I don't hear discussed very much. And it harkens back to the early days of the internet. There was a moment when the internet was taking off, when Cisco was all the rage, and then enterprises started thinking seriously about the need to spend aggressively on this new thing called the internet and the backbone. And they paused as a lot of competition started to make the rounds. And Cisco went down 50% plus as enterprises were pausing. Now, why are enterprises likely to pause or at least go through an assessment? They have to integrate all of their data first. Proprietary data is the secret to AI's success. And they have to map out in excruciating detail their workflows internally and with suppliers and customers and so forth. And this is going to take time. So we think this movement is real, it's going to be massive, but we think there's been a little bit too much too soon. You know, as we were moving out of NVIDIA, we were saying, okay, regulators are trying to crush Coinbase here, and we were buying it on every dip. NVIDIA happened to be one of the sources for that purchase. So it's not just what we do on the sell side, it is what we do on the buy side that you have to look at. And yes, we do hold it in the more specialized funds, but we've been taking profits there as well for reasons I just described.
Could we be living in the biggest market bubble of our time? Or are we just witnessing the maturity of technological advancements that have been decades in the making? Buckle up, folks, because today we're diving deep into the mind of one of the most influential voices in the investment world, Cathie Wood. Famed for her uncanny ability to spot trends and her fearless approach to the market, Cathie has a few thoughts on the current state of affairs. She's quick to acknowledge that Yes, we have seen some corrections in the market, particularly in the semiconductor industry. But hold your horses. She's not waving any red flags just yet. Instead, Cathie emphasizes the sustained demand for technologies like GPUs, driven by the surge in AI applications. She sees this as evidence of the market's resilience and adaptability, rather than a sign of impending doom. But let's not get too comfortable in our tech bubbles, folks. Cathie's got a knack for shaking things up and shifting perspectives. She guides our conversation to the broader implications of technology adoption across industries, underscoring the importance of data integration and strategic investment in innovation. Here's where it gets interesting. Cathie's decision to shift investments from Nvidia to Coinbase, a move that raised more than a few eyebrows in the investment community. But this isn't just a bold play, it's a testament to her forward-looking approach. She's favoring underexplored avenues like the cryptocurrency sector over more established markets. Cathie's strategy not only highlights the potential for high returns, but also underscores the value of diversification and strategic risk-taking in an ever-evolving investment landscape. So are we in a market bubble or just watching the natural progression of technological advancements? The answer, according to Cathie Wood, may just be a bit of both. The world of investment is a wild ride, folks, and Cathie Wood is one of the most fascinating guides we could ask for. If you've enjoyed this journey into the mind of one of the world's most exciting investors, do us a favor. Hit that subscribe button, give this video a like, and join us as we continue exploring the potential of the digital age. Until next time, stay curious and keep exploring.